Hey trader, how's it going? I hope everything's okay. Today I want to help you with two big doubts of my students. They usually have, they often come from exchanges without these elements and they aren't accustomed to these terms. It's spread and leverage. Normally, these are two crucial things in forex trading that every beginner should understand. It's leverage and spread. By the end of the video, you will have a solid grasp of what these factors can impact on your trading decisions, okay? Before we dive into the leverage and spread, let's quickly recap what Forex trading is. Basically, it involves buying and selling some currencies with the aim of making some profits in the fluctuation exchange rates. Just that. As simply as I can put it to you. Simply. Now let's talk about spread. In forex trading, spread refers to the difference between the ask price and the bid price. So if we can come to the chart, you will see the chart has two lines right here. You see a yellow line below. It's clear, but yes, there a yellow line, and above there's the green line. The green line is the ask price, and the yellow line is the bid price. The bid price is the price that market is willing to buy a currency. For example, if I buy it right now, it will count the yellow line, but the price will open above the green line and will be my position on the, as it will be the price is, where is it sitting in the yellow line. Okay, if I'm willing to sell it, the price will open on the yellow line, but it will count my position as it is at the green line. The difference between the bid price and ask price is the brokerage commission. Simply as that. When the brokerage commission is too high, you see those lines separating and think, all right, this might not be a good moment for me to go trading. And this line separates, and normally before market opening or after, in the after hours, normally the spread is higher. And during some news, when you have a big news that will go and make a huge movement on the market, for example, right now we can observe here on Nikkei like huge candles and big lines. It's a very volatile moment of the market. It's not great for operation. For example, if I go and sell it right now, I'm going to sell in the market. You will see that the line is open on the yellow line, but it's counting. I'm negative counting for the position. The green line, if I'm gonna put it way above, if the market can crash more down, it will go, the green line will touch my partials and my take profit and then close the position. Simply as that. So this difference is the brokerage commission. It's important for you to understand that the spread directly affects your trading cost and profitability. For example, if you think you might be on break even, you will might get a slippage and not be on break even. Sometimes people say I say above the high, you position your technical stop loss, and people do something like this. And I said, no, buddy, this will make you be out of the position right before, because when the price will come around here, the spread will take you. If you are selling things like this, you should be doing something like a little bit above, right? So you can be protected over spread fluctuations. That's simply as that. So now that we know that spread affects us in tradings, we will go to leverage. It's quite simple concept as well, but sometimes you gotta come to the basics. And I say like, hey, the difference between me and you guys is because I practice the basics a lot. So let's come out of the chart right now and look at me for a moment. Leverage is quite simple. For example, if I'm going to open an order of one lot, I must have at least $100,000 in my account. If I'm opening up the leverage part, the leverage configuration, and go higher, for example, 1 to 10 leverage, I only need $10,000 for opening the same order with one lot. If I go 1 to 100, I will need $1,000. If I go to 200, I'll need like $500. And I've seen brokers offers about offer leverage of 800,000, 888. I don't know exactly how far can it go, but you gotta understand something. Leverage is really good. when you're profiting. When you're losing, leverage can really damage your account. Okay, for example, if you have a $100,000 and a tick is costing $1, for example, and you open and the spread is already at 25 points, your order will be negative of $25. If you have $100,000, that means like 0.25%, okay, a quarter of 1% of your balance. That does not make an impact. But if you have $100 and you open a one lot account and you have the same spread, you have already 25% of your account over spread. So that's quite risky. Coming back to the real section now, to the real world. You not do not do that. You can't do that. That's not proper risk management. So you must be intelligent. You must be calm through the market. And if you are going all in one order, you cannot be calm, and you will not learn. That's why the reason we do partials. That's the reason I call my students to say, hey, let's calm down right now, and we go and operate live with me, for I can tell them, hey, be calm. The market is testing. The market it's in the manipulation, so we'll not go right now. The market is expanding, so if it break it out, we will buy. We'll go long, and people normally think that's not a must, but it's shown a real improvement in our students, a real improvement in our student performance, and they can reply my performance on the market. Okay, so now you got a little bit of understanding of how leverage works. I'm gonna show you one thing real cool the Black Arrow platform does. See, the order is quite fluctuating. You see the 1 minute graph chart right now. It's quite coming down, so the spread is a bit high, but when the green line touches my yellow line right here, it's my partial, this price will come up a little bit. So it's allowing me to bring my stop loss to break even with a little bit more of space between the price is right now and the my break even. So I will not be at risk. For example, if I was using MetaTrader and taking to break even so soon, see, the price has come up. Now I can put my order in break even, and I will not be stopped because this price is way further away from my order. MetaTrader does not do this. That's why I think Black Arrow is so great. Another thing, I don't have an emotional feeling with this order. If the price does not take my order, my take profit right here, I usually, even in the arena, I go with full my real account. We don't operate simulation on simulation account with my students. I operate my real account. If the price does not do this, I will cancel the order and be happy about it. I don't know. I don't think that's healthy for you to keep hoping and praying for God, please give me my take profit. No. Okay, so that's a really cool feature Black Arrow have. And now, in conclusion of leverage, it's really fundamental for you to understand. To be a successful trader, you must be aware of the factors that make your decision better or worse. If you are going all in an order, I think you are having some kind of limitations of your thinking, because your brain is stressed, and you kind of leaving the rational part of your brain out and thinking as an animal, like fight or flee, okay, reaction. So you normally tend to close winning positions because you are seeing a huge value, a huge percentage of your account in risk. So it might not lead you in the right way to in the right path for you to be a profitable trader. Okay, for this video, that's it. I read all the comments below. May leave you a comment if you still have a doubt. I read and take out doubts on when I can get to. See you guys next time in the next video. Tala.